This chart shows the stablecoin supply ratio, or SSR. The ratio is adjusted to demonstrate when levels have reached an extreme, which typically coincides with peaks and troughs in price. Currently, the SSR is not at an extreme low, but has risen with price over the past week. Crypto analytics firm Glassnode saying that could point to, quote, the increased potential to push the price of Bitcoin higher. Still, it remains to be seen whether SSR is a leading or lagging indicator, which means a trader's decision to hold Bitcoins or Bitcoin could be sensitive to sudden price changes. All right, joining us now to discuss BTC price is Haseeb Qureshi, managing partner at crypto venture capital firm Dragonfly. Hello there, Haseeb. Thanks for joining us. So just taking a look at Bitcoin, it's been a pretty choppy ride. I wonder, what is your outlook behind what is driving these ups and downs?
So most of what's going on right now is macro, and there are two pieces of macro that really matter at the moment. So the first one is the situation, obviously, in Ukraine, and the second is the knock-on effects that it's going to be having on the Fed. So for one, seeing the global instability going on in Ukraine means that the Fed is likely to pull back a little bit. It's going to be less aggressive than it would otherwise be, because it's mindful of the amplification of global instability that's happening due to the Russian invasion of Ukraine. So the second part of what's going on is that there's a broader maybe geopolitical story, you could say, that's playing into Bitcoin and crypto assets from the incredible sanctions that have been levied against Russia. And you can imagine all the other countries that are worried about a potential regime of U.S. sanctions, like especially China, is watching very closely what's happening right now with the sanctions that have been levied against Russia. And they're thinking, okay, well, look, if I go to Taiwan, that might be happening to me soon. You can sort of see a sneak preview of what's happening in the future. And the effects of that for crypto is that, if you think about it, a lot of what people are projecting that these sanctions may be doing is they may be hastening the end of the dollar regime. Right now, the more aggressive and the more politicized that the dollar and SWIFT end up becoming, the more likely it is that you're going to see an acceleration of the move toward a multipolar world. It's been happening for the last 20 years, and it may get accelerated by this kind of new iron curtain that might be descending on us if the sanctions remain in place and the war in Ukraine ends up becoming more protracted than otherwise we originally imagined.
So if other countries move away from the dollar, what do you think they'll be moving into? Will it be their own central bank digital currencies? Will it be Bitcoin?
So the answer is that it's going to be a combination of things, right? It's not going to be any one thing. It's unlikely that you're going to see all future payments that are not denominated in dollars start getting denominated into RMB, right? I mean, that's the dominant currency besides the U.S. dollar and the euro, and of course the euro. The euro and the U.S. have locked arms through NATO to impose these sanctions against Russia, and the euro is also included in the list of currencies that are sanctioning Russian banks. So the answer is that it's going to be a little bit of everything. But one of the de facto things, like, look, if you want to use the RMB, you can. But it's not clear that a lot of countries really want to be under the thumb of China any more than they want to be under the thumb of the US or under NATO. And so part of what accelerates the overall demand for crypto is the acceleration of demand for some kind of geopolitically neutral currency. And right now, besides gold, Bitcoin is kind of the only game in town. And so interestingly, you've seen demand for crypto on both sides of the war. You've seen demand for crypto in Ukraine, and Ukraine has received something on the order of about $50 million in donations through crypto. But you've also seen demand in Russia, talking about investigating the usage of crypto in order to adapt to this new post-sanctions environment. Which tells you, like, look, in the realm of geopolitical conflict, that's where crypto really shines. It's when the banks aren't working, it's when you can't rely on traditional infrastructure, that crypto really becomes the de facto place that you're going to go for financial services.
Along those lines, I have a photo from a journalist, Jason Cochran, accompanied with a tweet saying, Apple Pay and Google Pay no longer work on Moscow's metro system, leading to long queues as people fumble about for cash. This tweet has been circulated quite a bit. Now, some folks are commenting you can only use a financial weapon like this once, and now Russia and other countries that disagree with the West will completely move towards using and investing in non-U.S. technologies. What are your thoughts on that?
I think it depends. It depends a lot on how long these sanctions last, right? I mean, the original intention of these sanctions was that it was going to be a bargaining chip to get Putin to stop. And I think the idea would be that if Putin does reach some kind of settlement with Ukraine and there's some agreement to neutrality, and then they withdraw forces from Kiev and basically just take the Donbass, then it's very likely that some of these sanctions are going to de-escalate. Not all of them, perhaps, but a lot of them are going to de-escalate, and we're going to see some return to normalcy. Now, how likely that is at this point, it's becoming less likely with each passing day that Putin is actually going to withdraw and that these sanctions aren't going to be in place for a longer period of time. So the answer is that right now, we just don't know how likely it is that there's going to be a kind of further and elongated withdrawal from Russia, from the global financial system. But where it's trending right now, it's not looking positive.
The latest we're hearing is that President Putin had a call with the French President Emmanuel Macron saying that the conflict was going according to his plan, but they have agreed to secure some corridors for civilians to flee and evacuate Ukraine and send in humanitarian aid. So we'll see how that goes on. But in terms of investing, since you're a VC, what do you see happening of the East and West investing relationship and how that will be impacted by the Russian war in Ukraine?
Yeah, I mean, look, global instability is never a good thing. And although in some ways it's good for crypto, because crypto is, we kind of saw something similar happen with COVID. COVID accelerated the deglobalization of supply chains. But capital, of course, wants to be global. There's a natural kind of state of nature that capital wants to find the best return wherever it is. And so, in a way, part of what crypto benefited from in the rise of COVID was when economies are deglobalizing, crypto is that globalizing force. And so demand for crypto, in a sense, goes up when economies are trying to untangle from each other. And the same thing, I think, is happening geopolitically, is that when you see sanctions, again, that's countries trying to deglobalize and trying to disconnect from each other. But crypto's default global. Crypto is the opposite of what these countries are moving towards. And so I think in some sense it is good for crypto. Go ahead.
Well, I just want to mention, Haseeb, your firm has raised about $500 million for a new fund and previously raised over $300 million across two other funds at Dragonfly. So I'm wondering, where are you concentrating your investments?
So most of our investments, I mean, we invest a lot in the infrastructure layer, in layer ones, layer twos, DeFi, applications, gaming, NFTs. And the reality is that these trends are not going away, right? One way or another, although global instability is never the friend of commerce, generally speaking, the reality is that these things are global, and this is a trend that's going to be unabated, even with the instability that we're seeing in Eastern Europe. And so the overall trend line and the fundamentals, even in the advent of, you saw earlier this year that there was a decline in the assets of in the price of crypto assets due to rising interest rates. But the fundamentals of crypto are basically unperturbed. They've been going up and to the right. Numbers have been increasing. Users are growing. On-chain transactions are growing. So all the important things that you care about, if you're looking at actual signs of adoption, are going up. And so my view is that the long-term trend of crypto is not going to be changed just by some blips in global instability. What's happening right now in Ukraine is a tragedy, but it also portends a lot of what people have been talking about, which is the move toward a more multipolar world. And in a multipolar world, crypto succeeds.
All right, Haseeb, thanks for joining us. That was Dragonfly Managing Partner Haseeb Qureshi. Coming up, we'll be talking more with global capital markets consultancy Opimas about Russia, Ukraine, and the Fed. Welcome back. It's day 2 of Fed Chair Jerome Powell's testimony before Congress, where U.S. Senator Elizabeth Warren emphasized the need for stronger crypto regulations to prevent Russia and other countries like North Korea, Venezuela, and Iran from evading sanctions. Have a listen.
Crypto poses a variety of threats to financial stability, to investor protection, to our environment. But crypto is also providing a new way for countries to sanction-proof themselves. Cracking down on crypto is a critical piece of holding Russia accountable for its aggression. We can't fool around any longer. We need to get new crypto rules in place.
Amid an uptick in crypto trading volume with the Russian ruble, earlier CoinDesk TV spoke to Chainalysis about whether there is on-chain data showing Russia is using crypto to evade sanctions. Here's what Chainalysis had to say.
It doesn't appear to be happening right now, and we think, given some structural features of the cryptocurrency blockchains, that we think it's unlikely. If it were to happen, the order of magnitude of liquidity that would be flowing into the cryptocurrency markets would be detectable. We see this uptick in activity probably linked to Russians, everyday Russians, not Russian oligarchs that have been sanctioned, or the Russian state, but everyday Russians that are trying to preserve the value of their household wealth.
In terms of inflation, Federal Reserve Chair Jerome Powell saying the Russian war in Ukraine will likely increase consumer prices, though price pressures are expected to ease in the months ahead. The invasion so far is not shaking the Fed off its course of raising interest rates at its meeting this month. Joining us now to discuss is Octavio Marenzi, CEO and founder of Opimas, a management consultancy focused on global capital markets. Hello there, Octavio. Thanks for joining us. So Russia's war isn't steering Powell away from an interest rate hike, but from what I understand, you believe this will be limited in scope.
Well, he's basically said it's going to be 25 basis points, and there was some speculation that it was going to be a full 50 basis points increase and perhaps even more. But it looks like he's backed away from that quite rapidly, and I think he was looking for a way out for some time. Powell, back in 2018, when he took over the Fed, got spooked by the markets declining as he raised interest rates just a little bit. And he's basically seen that happen this time as well. And I think Ukraine gives him kind of the pretext to back out. He's seen the NASDAQ come down over 15% from its high at the end of 2021. The other indices are down a bit. And so he's concerned. He's a bit scared by crashing the market further. So I think he was looking for an excuse already to back out and not have a very dramatic increase in the interest rates. And Ukraine gives him that cover.
What do you think the market impact will be for Bitcoin?
Well, I think what's going to happen is that he will raise interest rates a few times, I think, over the course of this year. So he's going to raise it 25 basis points in March, and he might raise it 25 basis points another month later, and a few other Fed meetings raise it 25 basis points more. And I think what that will do is will put increasing pressure on the equities markets, and then he'll back away. He's going to be very, very worried about crashing those markets and declining asset prices right around basically all asset prices have benefited from the Fed's monetary policy have all gone up, so they all come down with that. And then I think he'll return to quantitative easing within 6 or 7 months. So that's what I'm expecting to see. And I think that will be very, very beneficial for Bitcoin. So I think once that happens, once it becomes clear that the Fed has capitulated and given up tightening its monetary policy and increasing interest rates, that we'll see a surge of money go into Bitcoin.
Right. Well, with U.S. and European-led sanctions on Russia and cutting them off from SWIFT and the global financial system, do you think Russia will turn to crypto?
I think there's some misconceptions about what SWIFT really is and how it really operates. I think, and this is going to sound a bit technical, but I think there's some distinctions to be made. First of all, SWIFT is not really a payment system in the sense that money does not really move through SWIFT. SWIFT is actually just a messaging system. And it's two things, basically a messaging network and a messaging format. But there's nothing to stop you from sending a SWIFT formatted message through email or via a fax or any other way you'd like to do it to get exactly the same information to your correspondent bank. The actual payment and settlement happens between the two correspondent banks that have a relationship with each other. So they have accounts with each other and they move the money back and forth in those accounts to settle the amounts outstanding. And when they reach a certain threshold, then they actually send some central bank money through. But so you can get around SWIFT using the SWIFT network very easily, and you can still use SWIFT messaging formats. They're public. You can use them. Anyone can download them and use them. So it's an important distinction to make. So First of all, you can get around being excluded from SWIFT in the case of Russia now, because they're not excluding all the Russian banks, so they can just pass all the volumes through those banks that are still allowed to participate. If all Russian banks are excluded from SWIFT, the way it happened, for example, with the Iranian banks, they will pass their volume then through other banks, foreign banks in other countries that are more friendly, maybe through Belarusian banks, maybe through Chinese banks. Who knows how that will work? But they'll get around the rules. And then if it really doesn't allow them to do that anymore, they clamp down on that, they will start using some other way of getting electronic messages to their counterparties. And that could simply be email. You could send a SWIFT formatted message in email and settle things that way. So I think it's very, very tough to block Russia out of the SWIFT payment system, out of the international payment systems. It's almost impossible to do. And will they move to crypto? Perhaps they might be tempted by doing that. They've always had a very ambivalent relationship to cryptocurrencies. I don't see them jumping on board that now. Governments tend to love their central banks and love their fiat currencies and not give that up very easily.
Mm-hmm. Well, Bitcoin is a commodity. Other commodities like oil are also on the rise. Russia is a member of OPEC. Is the war making commodities scarce and amid high demand?
Well, I think it's really an interesting question. If you look at the price of oil, it certainly has gone up a lot over the course of the past 6 months. But most of that rise was well before anything happened in Ukraine. So back in the summer of 2021, oil was basically $65 a barrel, and then it went up to about 95. So there was an over 40% increase well before anything happened in Ukraine. Now, we've seen the price of oil go up an additional 15% with Ukraine, but most of that rise came well before Ukraine was even on the picture, on the horizon. So it doesn't look like the price of oil going up has much to do with what's happening on the ground in Ukraine. But bear in mind, it's basically been said that Russia's oil supply is not going to be cut off, and payments for oil and for natural gas are not going to be cut off, because that would be too damaging to the world economy. So that seems to still be flowing, still working. So I think the very recent, I mean the past few days increase that we've seen in the price of oil, which has been quite steep, has largely to do with the fact that the Biden administration had given out drilling rights in about 1.4 million acres in the Gulf of Mexico. That was challenged by a judge and thrown out, saying they hadn't taken into account the environmental impact on that. And the Biden administration just announced the other day they weren't going to challenge that, and they were going to let that stand, basically taking that entire oil supply off the world market. So I think the increase in oil prices that we've seen recently has much more to do with the Biden administration and its relationship with oil and climate change and things of that sort than it has anything to do with Ukraine. And the movements in oil prices we've seen bear that out. It's not related to activity on the ground in Ukraine, but much more the Biden's administration and what they want to achieve in terms of climate change.
All right. Well, thank you for that geopolitical financial analysis, Octavio. We got to wrap it there, but that was Opimas CEO and founder Octavio Marenzi. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.